Good morning all and welcome to this morning's video. So this morning I have two pairs on watch and those are Aussie yen and pound Aussie. Okay, so I'm going to break these down for you now, as I always do, tell you what I will be looking for, and then tell you how I will be looking to manage these positions if they actually shape up. If they shape up next week, great. If they don't shape up at all, that's absolutely fine as well. Okay. So Aussie yen on the higher time frames, we have this according to my data is an all-time high. I did notice on somebody else's data that it wasn't an all-time high, but regardless of whether it is or whether it isn't, you can see that we have a significant high that a lot of people will be paying attention to. Okay. The things that stand out to me is that according to my data, it's an all-time high. The other thing that stands out to me, or one of the other things, is that we have a near miss to it. That's often what causes price to gravitate back towards these areas. Another thing that stands out to me is, I've just moved my alert accidentally. Okay, bear with me, folks, while I sort this out. Okay, things like this happen when you're making videos. So let's put that guy back where he's supposed to be. Right, there we go. Right, where were we? Daily chart, weekly chart. Yeah, the other thing that stands out to me is that we have a sharp move. We had a sharp move up followed by a sharp move down. That in itself, given that this is the weekly chart, tells me that there must have been a lot of liquidity here for a sell-off of that magnitude to have occurred. Okay, this series of near misses to it, that also gives me a clue that, it's a significant high. Not that we really needed to, not that we can't see that from the higher time frames, but the other things that stand out is that we have the impulse, the more corrective move down, and a continuation. Typically speaking, that is a completed move when we see stuff like that. Okay, when we see the impulse correction continuation. The other things that stand out to me is that this is quite a corrective move up all in all, and then the last piece of the move has a bit of momentum behind it. That's also what we typically see if we're going to move to the downside from an area of value, because typically speaking, this is usually the buyers getting out of their positions. And another thing that stands out to me on the fly is at this moment in time, of course, this weekly candle has not closed yet, but we have a big green candle, a smaller green candle, and then a slightly smaller green candle, suggesting that this is running out of momentum, running out of steam, as it were. Okay, we know that typically speaking, we break above such areas if we're going to move to the downside, and we may be seeing the first signs of that now. Okay, we usually break above, catch people on the wrong side of the market. Some people that were holding their buy positions continue to hold because they think when it breaks above, what if it keeps going? That's the greed mentality that I was talking about in previous videos. Okay, when it breaks above, the broker platforms get hold of it and they say Aussie yen at all-time high, or whatever high this actually is, according to the full data. That encourages FOMO. Many people start buying once it breaks above. There are the retesters who believe that resistance becomes support once it's broken above. So they start buying. There may be evidence of that here. Okay, I don't see any evidence of that here, but often you get, when it comes back down, you see people trying to get long. But as I've often said, if it's going long, if it's going to the moon, to coin a phrase, according to my data, where is it going to? The professionals, the bigger players have a plan. Okay, now they have an entry plan, but they also have some kind of exit plan. They may be trailing their stops, but they have an exit plan of some description of where they're going to get out. And if there's no value areas above price, then where are they planning to get out to? Okay. So it's no surprise to me that at this moment in time, what looked like a bull flag continuation, I said that this could look like a bull flag continuation. I said I think it was yesterday's video. And then all of a sudden we get the impulse correction. We don't get the continuation for the reasons previously given, and we just drop out. And that's exactly what's happened at the minute. Okay, you can even see if you analyze this structure on the 15-minute chart. I was just doing this before I started making this video. This is textbook stuff. Okay, so we have the high there, we kind of near miss to it. We have a series of near misses. So when price is near missing to a high, that implies that, that's where the value is, okay? And you can see here, and when we do get these near misses, where do you think these people are putting their stop losses if they're selling here? Near miss, they're putting their stop losses up here, okay? And then at the end of all of this, we get this a little expansion into the area, okay? These expansions are usually either continuations or reversals. You can see in this case we have the 1, 2. You can even see, I'm sure it would be clearer on the 5-minute, but we get the 1, 2, break above. So even here, people start selling too early, then it breaks above, they get washed out. So do all the stop loss orders that were above here. Okay, people call this market manipulation. Well, is it really manipulation if you've put your stop loss there? It's pretty obvious where they are. Okay, so has somebody hunted you? As I often think of this, if you're a wild animal and you stand in the way, right in front of the huntsman with the gun, and doing a little dance in front of the huntsman, have you really been hunted, or have you just made it obvious where you are? Okay, so then we get the push down, the correction, bit of a messy one, but we've completely dropped out of that now. Okay, so you could get short up here potentially. But what I'm going to be looking for is I'm going to be looking for what I was looking for all along, which is the because we're still above the value area, I'm going to be looking for a break back below here, back below the higher time frame area of value, followed by either a 3-touch 5-minute continuation with a 2-touch, or a 2-touch continuation, 2-touch 5-minute continuation with a 3-touch structural approach, and then I would look to get short on the break. We've got the same thing on the 15-minute chart or above, and given the size of this drop, it wouldn't surprise me if we get something larger. Then I would look for the same thing on the break, and then I would also be looking for an entry within if we came back up to tag the first high, whether that was a 3-touch or what I've drawn. Okay, and then I would look to manage this trade down to the base of this structure. I would measure from this range to range, as I've illustrated in previous videos, and then I would have a take profit set there. Okay, and I would trail my stop loss at the same time. This is not necessarily, as I said in previous videos, not because I think it's going to stop in that area. It's just because of the pullbacks that would likely occur, the profit taking that would likely occur after such a large move down to that area. Okay, and I don't want to sit through massive pullbacks. Okay, especially when we've got all kinds of things going on in the world. The less time you can spend in a trade, the better, unless you're swing trading with a very, very wide stop loss. So you can see that low on the daily as well, this bit of consolidation there. So that would be my target. I would trail my stop loss down to there, and I have an alert set slightly in the wrong place. I'm going to move that down slightly. So I've got an alert set just to see if we come back down towards the area of value. Okay, and if we don't, then obviously we're still floating around in this area. Okay, so that is Aussie yen. Nice and simple. Okay, this to me, I think this may be ready kind of on Monday if it does shape up, but we shall see. I've got it on watch anyway, just to see if it shapes up a little bit more. All we really need is one candle. It would take one impulsive candle for this to just drop out. Okay, and then we'd be potentially down in that area. You can see if we separate the structures here. If you look at what we've got a okay, we've got wicked to that area, so it wouldn't surprise me if we get something like this, tap into that area, then push down, and then potentially that could open the floodgates. But we shall see. I'm just going to let this do this thing. I'm not going to microanalyze too much. I just thought since I've only got 2 pairs on watch, dive into a little bit more detail. Now, if Aussie yen is moving to the downside, okay, then that implies Australian dollar weakness, which kind of gives some extra validity to the idea of pound Aussie moving higher. Okay, because if the Aussie yen is at such a significant high and it sells off, and the sell off would likely be aggressive from such an area, then there would likely be some kind of aggressive rally on pound Aussie that we may be able to capitalize on. Okay, if we just zoom out, you can see we have a very, very standout low there. Okay, and what have we done? You can see even on the daily chart, we have the first drive, second drive, and We have the near miss. You can see the near miss to that area. Potentially we're tapping into that to give us that third drive to complete this reversal structure. Okay, so you can see that this is separate to all of this. Okay, so we may be able to capitalize on a move up to here, or in my case here, which I'll explain in a minute. One of the reasons this is slightly lower on the list is simply because if we measure this, so we have the impulse up to there where this correction stopped, you can see that we have pulled back about 70% of that move. Okay, so that increases when we have an impulse up. So when we have an impulse up and a correction which is this wide relative to the move up which has preceded it, potentially this decreases the likelihood of a further continuation to the upside, okay, and increases the likelihood that this becomes an M style pattern where we get kind of this, and then we just drop out. And essentially, one of the reasons I believe is because the people that were holding the buy positions just get bored because the correction has got so wide and they've been in the position so long that it ends up just dropping down, and we dropping back down to here, and we gravitate back towards there, and then we see moves potentially from there. Okay, but that doesn't mean, even if that does happen, because we've got very, very clear structure here, even if that does happen, we could still potentially capitalize on a move up to here or to here. Okay, and given that this is separate to all of this, then perhaps we see the continuation to the downside to create that M style pattern. Okay, and that would make contextual sense. Okay, so I've just got this slightly lower down on my list for those reasons, but that is the thought process. So as we zoom in, you can see price is moving down correctively. Okay, this is not we just, at this moment in time, this price action is not giving me a clue that we're going to, break below here and start forming corrections to go down to that higher time frame liquidity point which I was speaking about. We've moved down correctively. So when we move down correctively, the next natural impulse move is an impulse in the other direction. So where would price find liquidity for that to happen? Well, likely down here, because this low near missed to that higher time frame low. Okay, and as I said, that would complete this structure. This would be the corrective middle section, and then we would have that impulse correction continuation to complete that leg down to there to give us that move to the upside. So that's the thought process at this moment in time. Okay, you will see, I was expecting, because of the general election, I was expecting a little bit more volatility than this, but given that the election has pretty much gone how the polling experts, and I use that word in quotation marks, but that's a story for another day. Given that it's gone pretty much in alignment with what they predicted, I'm not surprised that we didn't necessarily see too much volatility. But regardless, what I'm going to be looking for is basically the same that I was looking for on Aussie yen, but on the flip side, I'm looking for a break below the higher time frame area of value, a break back above the area of interest, and then I'm looking for a 3-touch 5-minute continuation, or a 2-touch 5-minute continuation with a 3-touch structural approach. What I've drawn here, if we get get the 3-touch, even better. Okay, and then I would look to get long on the break. Okay, and I would be able to manage this up to, so if we just separate the structures here, you've got one piece of structure, you've got this little correction here, you've got this structure here, because we have a near miss, 2 near misses to this high, so that implies that this is one piece of its own. So even just up to the top of this structure, okay, we've got 1.85, and I don't really see, if we've broken below and washed out all of that liquidity, I don't see price holding in that area, and we suddenly just push back down. So even just up to there, we've got something in the region of 1.85. But looking at the more significant highs, okay, if we zoom back out, what do we have? We have a near miss here to this high, which was the start of all of this consolidation. Okay, price dropped out, and then we started correcting. So this is the start of all of the consolidation. Okay, and if we just measure, we do exactly the same what we did on Aussie yen. We measure it from the higher time frame. Let's try that again. We measure from the higher time frame liquidity point up to here. What do we know? That sharp move where there's likely liquidity. Okay, it's more of an inflection point, because this is the start of the correction, but we have a sharp move just before here, or just before the 90% area, where price could pull back deeply, even if it's going to continue to the upside. So what I would do is, let's just put that back on again. Something I wanted to touch on. So when we have a very sharp move, which is sat just before the 90% rule, the 90% area where I would normally set my take profit, I instead set my take profit at the sharp move itself and not at the 90% area, which is why I've got my target there. And then we would have something in the region of 6%, about 6% to work with. Okay, of course, if I got the entry within the flag and got something like that, then you can see that that increases the risk to reward. So it's the stop loss is dependent on the structure that forms and whether we get the entry within the structure or on the break of it. Okay, and I've got my alert set just at the area of interest, just above it, just to see if we push down to there. Okay, as I said, we often get a bit of momentum as the buyers get out of their position, as I illustrated on Aussie yen. The same is true, or may be true, on pound Aussie. We may get a bit of momentum to the downside as the sellers get out of their position, okay, before we see that turnaround. But we should see this may be another one looking at it, which isn't ready until Monday, and maybe isn't ready at all. Who knows? We're not here to predict the market. It blows a lot of people's minds when you quote them Mark Douglas and you say things like, you don't need to know what is going to happen next to make money, but you don't. Okay, it's not possible. If many of the market participants don't know what they're going to do next before they actually do it, then how the hell could we possibly know with a high degree of certainty what's going to happen next? All we need to know is, can we manage risk? And a position like this, if it was to shape up, would allow me to manage risk in the majority of cases. As I often say, nothing happens all of the time and nothing happens none of the time. It would allow me to manage a position like this very easily and get my risk off the table, which is the primary importance, before anything else was to occur. Okay, and then if we're in profit and price starts to do what it would normally do, okay, then great, excellent, you're in a fantastic trade. But that's the thought process, folks. I hope you've enjoyed this video. I will be back on Monday, most likely, with another video, and if there's a trade recap to be shown, then that will be shown as well, regardless of whether it's a win, loss, or break even. Have a great rest of your day, folks. Have a great weekend, and I'll see you again in that next video. Thank you very much indeed for watching.